Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 2nd of February, Bull versus Bear webinar with Steve Miley on the call for TradeDay.com. So welcome, everyone. We're going to go through, as ever, our usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at some articles from the major newswires. What are the macroeconomic, the fundamental, the geopolitical factors that are affecting financial markets right here, right now? And then we'll have a look at see how those financial markets are being impacted by taking a look at the charts and seeing where some opportunities maybe arise from those different factors that are impacting the markets and from the potential data that we're going to get coming up. Just to remind you guys, so let's go on to the calendar first of all. We do have the Chinese New Year holiday at the moment. Such as Chinese markets, South Korean markets also closed in here, and we're expecting markets to stay quiet. The Chinese markets closed, so Asian markets stay quiet for all of this week. We do get the OPEC Plus meeting today. Usually we get something out of those, by the afternoon. So watching out for that going through into today. Going through the day as well, we've already had some important data. Eurozone Cpi. Now there's a good article in here on Reuters morning bid. I'm going to share the link into the chat, so you should be able to see that. If you've got any questions, by the way, guys, please do feel free to ask them. There's good. So if you go to the morning bid, so that's kind of their update, their kind of article in here, that's similar to the 5 things to start your day, and they're talking about peak inflation and talking about the ECB and the European data. Okay, so the forecast inflation from Reuters was at 4.4% coming in, easing from the previous month's record at 5%. But unfortunately for the ECB, the data come in even higher than the 5% that was a record, to a new record at 5.1%. So obviously that is a real concern for the ECB in here. And this article's talking about, the fact that, are we at peak inflation? Well, clearly not, because we've just hit another peak. And even though there's nothing expected out of the ECB, the euro has rallied against a notable rally, like 0.5% up this morning. The euro's rallied because of that higher than anticipated Eurozone inflation data. So really a concern in here. And we do have the ECB meeting coming up in there. So inflation stations, 5 questions for the ECB. There's a good article in here. They published this. This was from yesterday, I think. Yeah, I looked at this yesterday. So I'm actually from Monday. And talking about maybe the shift in language and what the ECB might do. So I'll share that one into the chat as well for you guys to take a look at if you want to take a look at that article. So that's going to focus into tomorrow, but it could cap markets because we have the Bank of England as well tomorrow. So going back to the calendar, it's not on today's calendar, obviously, but we do have Bank of England tomorrow as well as the ECB. So markets might be a little bit hesitant. US equity markets, US markets tend to do their own thing. But given we've got 2 major central banks in play yesterday, markets might be a little bit cautious going into today. We do also get ADP non-farm employment change. Remember, that's the kind of precursor, the guesstimate of what the number could be from Friday's actual official non-farm employment number. So we get that out. That's due in 42 minutes time. So not long at all in here. So that comes out at, let me get this right. So it's a quarter past, isn't it? Yeah, it's a strange time. So it's a quarter past the hour. So we've got that coming up. So in US time, it's 8:15 on the East Coast, 7:15 Central. So it comes out 1:15 London UK time, and 2:15 if you are in Europe. And then this afternoon we get crude oil inventories. Now, given we've got the OPEC announcement, crude oil inventories is probably not going to have too much of an impact on markets. But we do have in here, to jump into an article here, oil steady on US stock draw. So that was from yesterday's. Remember, we get data on Tuesday and Wednesdays, 2 different sets of data from US inventories. So oil steady in US stock draw, but eyes on the OPEC plus move. But oil sitting right up at highs, and we'll take a look at that shortly going into the OPEC meeting in here. So so we've got the OPEC. So we got the oil data as well this afternoon, and then we have some central bank speakers in here from Canada, probably not going to impact anything we're looking at in here. More importantly, going into, if I go to the earnings calendar, yesterday. So let's just do a little recap onto yesterday first of all. So yesterday, let's talk about the negatives. PayPal, really disappointed. Shares plunged 17%. Going back to the earnings calendar, and I'll jump into yesterday's data in here. So we go and see PayPal in here. Just missed in here on, but just beat on the revenue. Only a slight miss on the EPS, but nevertheless, PayPal shares in here dumping lower with a bleak forecast. That's the forward forecasting from PayPal was negative, and PayPal after hours and pre-market in here down 17%. But on the positive side, going back to earnings from yesterday, Google beat significantly beat in here, and the EPS was expected 27.78, came in at 30.69, so a big beat on the EPS in here, and that certainly propelled markets higher yesterday. So Nasdaq futures rallies, Alphabet and AMD also as well. So going back to the earnings, we go to AMD. So AMD in here significantly beat as well, particularly on the EPS side. So two real positives out there overshadowing the negatives that we saw from PayPal, with the Alphabet / Google and AMD numbers very positive, and a real strong advance in after hours trading last night on those Google numbers. Google surging higher, and after those strong Alphabet numbers, obviously a similar company drawing its revenue from advertising revenues in here. Meta used to be Facebook, so Meta now reporting this evening. So going back to the earnings calendar, switching it into today, and we see Meta in here reporting today after the bell. Okay, so we'll be certainly keeping an eye on that for later today. Let me just run through a few of these others. So morning, we've already spoken about the peak inflation and the inflation concerns around the ECB that's going into tomorrow, and that's helped. So Eurozone here we go. Look, January preliminary CPI plus 5.1 versus 4.1. A big blow to the ECB. This is on Forex Live. I'll share this one as well. So, and this is helping. The recent weakness that we've seen in the dollar. We've seen, generally the dollar has been very, very strong in here through the second half of January, but losses to the US dollar over the last 24 to 36 hours are being exacerbated in here by this euro strength. Remember, a lot of the dollar index is made up of the euro, of EUR/USD. So the euro rallying against the dollar because concerns that the ECB may have to be a little bit more aggressive with their stance on monetary policy, a little bit more hawkish than we're currently anticipating. So we're not going to expect probably any real change in tone from the ECB tomorrow, but maybe they were going to have to start to change the narrative as they move forward. Okay, let's take a look at Bloomberg's 5 things to start your day. We've probably covered most of this already in here. So Google in here, Alphabet's forecast has comfortably beat estimates. Tech surged 10% in aftermarket and pre-market trading, dragging the Nasdaq with it, dragging the S&P 500 with it. Euro inflation data for January was very strong. We've already spoken about that. Today's OPEC Plus meeting. So we are looking for to crude prices obviously still very high in here. So the expected penciled in increase in production is by 400,000 barrels a day. We spoke about that, but there are some real problems in here about ramping up output from some members who don't have the capacity to do that. So all of this is adding to those inflationary pressures in here. And what else do we have in here? Much of the speculation about how the Fed has focused on how big and fast Goldman Sachs, and it's a warning about the volatility like central running down the central bank's balance sheet. So we've got that to contend with as well. And then we've got the ADP numbers. They're focused on the ADP numbers there. And then tensions easing at the moment in Ukraine with the dialogue, and we spoke about that yesterday. Meta in focus, already covered that for you guys and spoke about that. So what's been going on? Well, really in here, we had a strong close. These are the closeouts yesterday, but we go down to the futures markets in here this morning, slightly higher on the Dow, S&P 500 up significantly, and also the Nasdaq really significantly higher in here this morning on the back of those results from Google / Alphabet yesterday, and European stocks in here. Actually, where are the European stocks? European stocks are up as well, though, on the back of that. Okay, but not aggressively higher because we've got those two central bank meetings and they're talking about that there. Let's go take a look at some charts, shall we? There's the leap higher. We had it was strong anyway. This is the S&P 500, a really strong rally anyway. We've had 3 straight up days in here, taking back a lot of that negativity that we saw in the second half of January. So this was the third week of January. We had the big sell off, and then remember the last week of January last week was really choppy in the market, very, very volatile intraday, forming, this base pattern that I was talking about over the last few days. And then the market's built on that base. So we've had 3 straight up days now, Friday, Monday, Tuesday, and then higher again already this morning, being driven higher this by Alphabet. Okay. And if we go into now the 30-minute chart, you can see you've got a really strong uptrend. This downtrend line has been reversed. And you've got some really important swing highs in here to watch out for. A push above these levels in here could see another, impulsive move higher for the S&P. So the high there is 45.90.5, and the high there is 46.03. I've got those both as resistance levels. You go to my reports in here, download the reports go to the trading room under technical analysis reports. You'll see that I've got these levels marked. If we get above those, we can see another strong impulsive move higher from the S&P. Strong. There's that choppiness in the base built. We're through we're through now these trend lines, and I'm just going to step out on the. Let me go out to the 1 hour chart. I just want to get start looking at some retracement levels from the whole sell-off. So there's the sell-off from the very top. We can see all of it there. And let's look at some of the retracement levels, because it's going to be interesting now to see. So we go all the way from the bottom to the very top. And you can see already in here, there, look, just below those 2 peaks in here, we also have the 61.8% retracement just below those 2 peaks that I just mentioned. So if we get above those peaks, we're also through the 61.8. That completely then neutralizes, from a technical analysis perspective, through the 61.8% retracement, neutralizes the bearishness, all the bearishness from this whole sell-off. Obviously, this rally has already seen most of the bearishness, but that completely, we term it as neutralized it. And if you go to let me just make the retracement in here, and I can add in you could either go for this in here 78.6 or 68.4 in here, but let's go for the higher one in here, 78.6, and we apply that. And you see that's up there as well. So that could be a next target. And then you've got some peaks up in here as well. So 46.65 to 46.75 is kind of a target area. Maybe not that high today, but certainly the next couple of days I can see us there and looking for a bit. It could even be that high today. We certainly moved that, over the last couple of days, we've seen that kind of movement. So that 61.8% retracement, the market's kind of pushing up towards that even now, right? So, we can get above that 61.8, then the market, and that 61.8 is coming in around like 45.80. Through 45.80, then quickly, then we got that high there. We said 94.25, and then the peak at 46.03. So some real interesting levels there. And I would, even just a little below the list, you can have a stop just below this little swing low in here. If you want a deeper stop, you'd have it down from the impulse point down here at 45.06, but you could just have a stop below this overnight low as well. So there we go. That's the S&P. For the NASDAQ, same story, but stronger. Really, this overnight, given that it's being driven by Alphabet, given this is the tech sector in here. And then again, if we go and, I'll go to the 1 hour chart in here. We've reversed the trend lines. We've spoken about those trend lines. The market's now, way through those trend lines. Similar levels in here from the same peaks in here, swing peaks. So we've got 15.340, 15.340.25. High there, and then we have the high here as 15.372. Okay, so we've got those dual peaks in here, and then again I'm going to just zoom us out to the sell off from the very high. I think that's the high there. Yeah. If I do the FIBA retracement again from the whole sell off, in here, and you can see through that we're just only just gone through the 50. The 61.8 is notably higher, up at 15,533. But the we're just gone through the 50%, so half of it back all the way from the top. Remember, the reason this is we're not as far back in here because this was more of an aggressive sell-off from the Nasdaq. And why was that? Because it was being driven by the higher yields, the higher interest rate perception, the more hawkish Fed, which was driving the tech sector lower faster, okay, and more aggressively lower because growth stocks underperform in that environment. So we've seen the market's not quite, as this is actually lagging on its recovery to some extent in this on a percentage terms of how much it's got back. Say the S&P is getting close to the 61.8, the Nasdaq is only just got back above halfway, but it is back above halfway, and then certainly this looks bullish to me in here. And I say maybe the next trigger points are those peaks that I just outlined there. So looking positive on the stock index side. Let's flip across to the commodities in here. So again in here, we were spoken about these kind of, this is oil. So the oil market in here got the bigger uptrend, that comes all the way from December in here. So we've got this bigger uptrend, but then the market has been very cautious, and we go and look at the daily chart, and we've looked at this kind of these indecision. Look at all those indecisive doji patterns. The market's hardly changed each day. We had a little impulsive move higher back on Monday, and since then the market's been kind of sideways, but we have made new highs, and we go in here, you do have higher, even in this consolidation phase in here, you've got the highs, the lows going higher, higher low, and then higher low, and then you did dip lower, but then you made this, so you got three though, higher lows, and then high, and then yesterday we just made a new multi-year high. I got another new multi-year high in here, up to 87 yesterday, and then overnight getting really close to there again in here, up to 88.80. So 88.80, no, sorry, not 88. 88.87, excuse me, and then 88.80, so getting close to that. So this stays very, what we call, all of this has been what I would class high level consolidation of the strong up move that we're seeing, the bigger up move, going back to the daily chart here. The bigger up move, this is a high level consolidation. The market's marking time. It's working overbought conditions down here. You can see down at the RSI, the overbought conditions gets worked off whilst the market kind of treads water and goes sideways. Obviously, waiting for OPEC. OPEC's going to be critical on that. Let's have a quick look at gold in here. So having had the big sell-off in here, a significant sell-off. We had the break to the upside through mid to late January, and then a big sell-off in here as we've seen the market move back away from risk off back into risk on. So risk on negative for gold. So the market sold off in here, even though the dollar has weakened slightly as well. But we've seen with some further dollar weakness over the last few days, we have seen, and obviously through here, actually the dollar was actually strengthening through here. But then through here, we've had the dollar in here, the dollar weakening, and gold trying to rebound. So if anything, the market slightly did fail at an important resistance level yesterday. So on my daily charts, you see it, I'm probably still looking negative, but we have had a dip and a rebound. So the market's actually gone lower since I wrote that report and back higher. I'm still, though, got no strong view on gold. I wouldn't be trading it. If we go to the gold move in here, bigger picture, go here, it's on a much bigger range. We are coming from the bottom of that range, but I think it's got to get above, some resistance levels in here. It failed at this one in here yesterday. So I've got this marked. I think it's an important level in here. So where is it? 1811.9. I think slightly different on my report in here, maybe slightly higher there, but the market failed from there yesterday. Failed just below there, came back lower, but it's pushing back higher. I've got no strong view in here. If it takes out this high and this peak in here, you probably get more bullish, but whilst below there, you're probably just a little bit bearish. And then just one final nod to the dollar index in here on the daily chart. So, selling off, the dollar's weakened over the last few days, and as we've gone back into risk on mode, and then weakening again today as the euro strengthened on the back of that strong CPI data from the Eurozone. So the dollar giving up a lot of the gains in here that we saw through the second half of January over the last 3 days. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Stay safe, and I'll be back with you with another bull versus bear webinar tomorrow on Thursday. Take care.